Hi guys, Jason here again, and today I want to talk about kind of the best way to tackle the markets in 2015 and beyond. Let's say 2015 to whenever this new market bubble bursts. We'll go over how we know we're in a bubble in a moment. And this was really inspired because last week a student wrote in and about one of the articles I'd written about kind of how we're in a bubble and what that looks like. And he essentially said, you know, hey, that's great that we're in a bubble, and I appreciate the issue, but we're still heading south, right? So what exactly do we do? And here's the actual quote, because I thought it was really nice and succinct. He said, I appreciate you for sorting out the real issue. We're heading south, and the government is trying to pad the numbers by quote-unquote bloating things that no one wants to buy, like the corporations we're stuck with. And that the stocks are overpriced and a large buying opportunity is approaching. He went on to talk about the importance of cash, and I realized that while I had talked about being careful in the current markets, I didn't talk about exactly how to profit from the coming market crash. So I thought it'd be a good idea to put together this video for you guys to kind of talk about what's happened recently so you can see that we actually have a great wealth building opportunity right in front of us. So the graph I have here on the screen is just to show how bloated we are in 2015. We can see the 2007 high and the 2008 low right here. So 2007 and 2008 low. And then we're all the way up here in 2015. Now that is a really, really bloated market that we're looking at here. And the bad news is that if you haven't already been participating in this, the money train is pretty much over. And so if you don't already have investments and you've missed this money train, I don't want you to think that there's nothing you can do. I just want to make sure that nobody gets burned when the new market highs become new market lows very, very soon. And now is the time to prepare for those market lows, not jump into a market that's already bloated and high. And there actually are some great opportunities if you look in other markets like internationally depressed economies like Greece and Spain, and even Russia still has some good opportunities. Or if you want to play around in the commodities market, I mean, there's gold, coal, iron, silver, all are being hammered and depressed for various reasons. So if you're super adventurous and you want to go check those markets out, those are great places. If you just have this itch and you need to be investing or you need to be trading, definitely the markets is not a good place to kind of console that ADD nature. And I know I have that problem too, so that's why I go look at those other markets, even though I'm not as good as I would be with the stock market, because that's really where I like it. But if you know that you can't just sit in cash doing nothing, those are some nice areas to check out. And we'll have some other videos about how to check those out safely without speculating. And I want to share with you why I've kind of taken a step back from the markets and why you really just need to not be playing at all. And so we're going to look at these two graphs. The first graph is the just giant decline in corporate profits. You can see here at the top that corporate profits are just dropping off. And you can see there's been some growth patterns in the past. We've had some good growth, but the growth is coming to an end, and we're seeing drops here and drops down here as well. On top of this, if we look at the next chart, which is U.S. stocks compared to the U.S. macroeconomy, we're seeing a giant divergence here. And you can see up until this point, these two chugged along like they're supposed to, in tandem. They were moving up and down together. That's because when the economy goes up, the market should go up. When the economy goes down, the market should go down. We're at this weird place where the stocks are all-time highs, and the economy's doing this. So we're looking at a place where corporate profits are plunging, and then we have U.S. stocks hitting their all-time highs here in 2015, and at the same time we have the actual U.S. economy at an all-time low, just tanking, and yet the stock price is going up. Well, this is really because there's been a giant divergence between U.S. stocks and the real U.S. economy, and that's how we know we're in a bubble. As soon as stocks take off and the economy's left behind in the dust, we know that the proverbial, what I like to call money train, is over. Going back to our chart of just the S&P to show the general market, we can see that from 2008 to about 2013 was the last time that we had a really good and somewhat safe opportunity to make a bunch of cash in the markets. So to be ready for the next money train, you have to have cash already to go. You can't be ready if you're invested in a bubble and then lose a bunch of money when it crashes and burns. So it's not something that you can build once the crash happens, because if you're in the market, you will have just taken a huge hit to your portfolio, and it's really hard physically. It's really hard physically because you have less cash, but it's also hard emotionally after you've lost a bunch of money to say, oh, now it's time to invest. And there are thousands of investors who've already realized that this is about to happen, and they're already piling up cash and getting ready for the future. They're being patient, they're waiting in cash, and they have a list of great companies to buy once this happens. And I mean, you don't even have to have a list of companies. Honestly, you can just wait till the S&P crashes and then just buy the S&P and ride the next spike. I can tell you from personal experience, riding this train from here to there was a very, very solid autopilot return. I bought around 2000. I actually bought in early 2009, sold around 2013. Yes, it's gone higher. Yes, I could have made more money, but that's not the point, because you want to buy and then sell at specific times when you know that you've locked in a good return and you're not taking excessive risk. For me personally, after this point, we are in giant bubble territory, and all of this up here is just additional risk that's not worth it, because when things crash, it's going to just destroy a lot of portfolios. And so this is why, instead of spending my time trying to time when this is all going to blow up, I'm spending my time evaluating companies and figuring out which ones are going to thrive and survive when the crash comes. And when this chart repeats itself sometime after 2015, it might be 2015, 16, 18, 2020, who knows. But when it does happen, this number, this will be 2015, this will be the year it crashes, and then this exact same pattern will happen again. It's happened several times in history. It's just an ebb and flow, up and down. Now, the important part to remember is when you have this opportunity down here, you don't have time to go doing all that analysis when the market is at lows. That's why, since we're up here, we know that these periods, when it's high here and here, is the best time to do the analysis and have that list of companies. So when it plummets down here, you can immediately buy. You can pull the trigger, buy those companies cheap, and ride that next money train up. All right, so that's all well and good. But then the next question I normally get is, how much cash? I mean, how much of my portfolio or investing capital should I be placing and holding aside to this strategy? And my personal answer, obviously this is not financial advice, this is just what I personally do, I put as much as I can. Really, every dollar that's currently going into my investing portfolio for the stock market is just being stockpiled ready for this next big money train swing. And most financial advisors would be pulling their hair out by now, but who cares? You are the master and commander of your money, and no one is going to care more about it than you. And if you do what the masses do, you'll get the results the masses do. You'll get the highs of 2007, you'll get the lows of 2008, or you can do the savvy thing and wait for the next money train. It's really that simple. There's no need for complex models or fancy asset allocation here. The charts show us that the current money train is over, the market is bloated, and it's time to gear up for the next one. So let's just do a quick recap. Cash is king. It's time to start hoarding and stop investing. We want to be patient and wait for the bubble to burst. And then we want to be prepared by compiling a list of stocks Or if you don't want to choose individual stocks, just ready to go on some major indexes that are when they crash. So you're ready to go when the bubble bursts. It's going to be very important mentally to already know, hey, these are great. I know everything looks terrible, but it's time to take these companies or indexes and run with it. And that ties directly into number 4, where you have to be swift. You've got to have a plan. So whether it's something that we provide, like the Titan Stock System or the Easy Market Profits book strategy, you want something to be ready to go so you can swoop in without having to take a second look or take a second thought.